Zach Bacon reporting to you live from my office. So let's talk about rates. First off, the Fed decided to meet today, and all but one board member decided that it was time to drop the Fed funds rate. So the Fed has dropped interest rates by 25 basis points, or a 0.25%. That was pretty much the expectation from everyone. There are a few outliers that expected maybe a 50 basis point cut, but came in at a quarter. So great. It's what we all expected. What does that mean? Well, for mortgage rates, it might not mean much. That was, as I said, the expectation. So most of the experts that I've been following are saying that is kind of built into the framework and the cost of mortgages for right now. If the Fed had done a 50 basis point cut, we could have seen what happened last time they did that, where they cut by 0.5%, but mortgage rates actually jumped up. So hopefully we won't see that this time. Mortgage rates will probably just hold stable. What we really need to watch is the 10-year Treasury over the next 30 to 60 days to see where rates go, because they are much more closely tied to that. So what does this mean in general? Well, it means that the Fed has a little less faith in the strength of the economy. Part of that due to a massive revision in the jobs data that I'll talk about. But overall, they have a really tough job. They have to balance keeping rates high for longer so that we don't loosen up the money supply so much that we get the crazy inflation that was happening and way too much money in the economy like we saw during COVID, right? However, they also can't keep rates too high for too long, because that risks slowing the economy down so much that it could potentially turn into a recession, which, depending who you listen to, we have been very close to for a couple of years. Let's talk about that jobs data. So the Bureau of Labor Statistics actually did a massive downward revision in their jobs data, one of, if not the largest revision. So basically, there were 911,000 less jobs. Yeah, 900 and almost 1 million jobs less between March of 2024 and March of 2025. That is a massive revision. Is that incompetence? Is that really bad data getting compiled from everywhere else? Was it political strategery during the last election cycle to make the economy appear to be doing better than it was? Who knows? Actually, I guarantee you somebody knows. Don't know who that is, but somebody knows. So basically, that information showed that the U.S. economy is not doing nearly as well as what the previous jobs reports would have indicated. And that was what a lot of people have said. That's a big factor in what prompted the Fed to drop interest rates. So at this point, that's where we're at. We got the 0.25% cut. That will definitely help consumer debt, commercial loans, auto loans, credit cards, second mortgages on homes, home equity line of credit stuff. But first mortgage purchase loans, refinance loans, those are probably going to hold stable for right now, if I had to guess. But I am not an economic expert by any means, so let's see what happens. Any other questions? Let me know. Mortgage rates are still pretty good, so I'm seeing a lot more folks actually refinancing right now. And if you would like to discuss a purchase, those rates are pretty great. Get an application in and let's talk. Thanks so much. Talk to you next time.